Welcome to the Big Money Show. I'm Dagan McDowell, along with my co-hosts Taylor Riggs, Brian Brenberg, Jackie DeAngelis, and with us for this hour, Mr. Sunshine, Rosecliff founder and managing partner Mike Murphy. And I actually mean that. I don't mean that in an Eddie Haskell sort of way. Investors are hoping for a Santa Claus rally to cap off what has been a big year, but keeping their eyes set firmly on 2026. Analysts from America's largest investment banks galore, seeing at least an 11% gain on the S&P next year. Some are even predicting the index to soar past 8,000. Mike Murphy, how are you feeling looking behind you, but looking ahead?
Yeah, I think we're in a really good place right now. But I do get concerned when I see all the banks raising numbers and projections. But I wait till we have some sort of correction, which will happen at some point, I would bet, throughout 2026, and let them all revise lower, and then the market will start to move back higher. I think what President Trump is doing right now, where we are, strong growth coming next year. I think that's a certainty. Interest rates coming down will be a certainty with a new Fed governor. Less regulation doesn't get talked a lot about, but that's really helping businesses. So we're in a good place to go quite a bit higher.
It seems like looking at all assets, and anybody can jump in here, all asset classes, even with some of the kind of pullback we've seen later in the year, are still priced as if everything in the economy in terms of fiscal and monetary policy needs to go off without a hitch, meaning cheap money, new bond buying from the Federal Reserve, but no pullback in spending from the federal government. And inflation needs to drift down while the Federal Reserve refuses to fight it. I don't know how that holds up in the next 12 months.
Kind of we're set for perfection.
Yeah.
I see that point, but I think a lot of things have pulled back. Look at just as a proxy for AI, NVIDIA has come down from over 200 to it's trading today in the 170s. So I think there's a lot of room, and as growth continues to accelerate next year, I think it makes sense for the S&P 5, for the stock market, S&P 500, to be priced quite a bit higher. So I think I see your point, and it's a valid point, but I think we go higher.
Can I be Mr. Sunshine Jr.?
Sure.
And throw something your way, because you might know something about this. I thought this was interesting. I don't usually look at this. The Dow Jones Transportation Average.
Okay.
Did you know that it's up 10% this year?
Huge.
And approaching an all-time high, which is good news. Why? For the economy.
Dow theory, too, right?
Because if transportation stocks are up, means they're moving stuff, they're moving goods. It means that side of the economy is strong. So on the bellwether theory of which stocks are up, I like that as an indicator that 2026 could be good, Taylor.
I tend to agree. And I think, all the rage in the last 2 weeks have been talking about this AI bubble. And Dagan, to your point, what's priced to perfection and what still has more room to run if things start to sputter next year. And there's some sort of secondary winners. And Mike, maybe you can weigh in on this a little bit. Some of the notes I was reading over the weekend are industrials, Brian, transport, so you're talking about utilities. That's a very easy AI story that we've talked about. Real estate, if rates start to come down next year. Also, when it comes to AI, another note I read, which I hadn't really heard this before, is it's not often the enablers that win, think a chip maker, but the applicators. Who's applying it? Healthcare, financials, people who are now starting to use that technology that will change them, even if you've seen all of the changes already in the chip makers, which you could argue maybe we haven't, but maybe the easy gains are gone. And so I thought that was sort of a derivative play that we haven't talked about, where it's not just NVIDIA or chip makers. It's now the companies who are applying that and starting to see the profitability flow through their business. So there's, I think, certainly stocks underneath the surface that maybe are not as priced to perfection as, let's say, just Mag 7 or Alphabet up 13% since October 29th or whatever that statistic may be.
Yeah, totally. And, it's not too long ago we were talking about the first trillion-dollar company. When will the first trillion-dollar company come? And now we have Eli Lilly, which just passed that level. Also, so not AI-driven, just completely drug sector, completely different, but also a big winner, big mover. So, yeah, I think aside from Mag 7, there's a lot of areas that you'll see growth in next year. So we go higher.
So I think this AI story is a huge component of it. Never seen this exactly quite like this before. You look at the last 3 years of gains and say, how could this market go higher? Well, AI is certainly going to fuel that. And Taylor, I think you're right to point out it's not just the core companies, but now it's the companies that are going to benefit from those applications. But I sort of take a different tack, because while I love the stock market and I love seeing companies prosper in the way that we've seen during a technological boom, I also care about the fundamentals. And this is when I think President Trump's big, beautiful law is going to come home to roost. We're talking about low regulation, as you said. We're talking about lower oil prices. We're talking about tax cuts coming to fruition in the new year. We're talking about incentives for folks and companies to manufacture. We're talking about all these pieces of legislation that have, sort of touched us tangentially, but haven't actually taken force in this market. So I think that you're going to see that growth kick in. We've talked about expectations for GDP. And I really think that 2026 could be a gangbuster year. I mean, usually when I look at the charts, Mike, to your point, I do expect to see some sort of pullback, correction, which, Brian, you've also pointed out is actually a healthy thing when it does happen. So, I think that the president has sort of this evil genius thing that he does with his team. And I think he went to do his tariff stuff early to get that kind of done. I know we're not finished with it. I know we're waiting for the Supreme Court, but we've gotten through the hardest parts of it, it seems. I'm not really worried about inflation next year. I'm a little worried about the labor market, but if the growth kicks in this way, maybe the labor market will stabilize or even potentially pick up.
Do you want me to chat about the labor market for a minute? Howard Marks, Oaktree Capital Management, wrote like an 18-page blog post last week trying to ask the question, is AI a bubble? And I think on the employment conversation, there's two things. One is it's hard to imagine a world where AI doesn't reduce jobs. And we've talked about the rate of change at which AI is coming so quickly means that people are just going to be displaced faster. And so that feels really scary. But then I read this statistic. More Americans are turning 65 in 2025 than in any preceding year. 16 million baby boomers will retire between now and 2035. Could AI not just make up for that? Those job losses, AI replaces that, and then you don't have mass hysteria of mass people out of work.
Well, the problem is that they're not retiring. They're not retiring. They need to keep working. And so it's going to be older people competing with AI. But I'm not dismissing I've said on this program repeatedly that the productivity gains that people have developed using AI tools like your MCP agents just in the last 8 months are unbelievable. And unless people are using them, they can't get their heads around how rapidly AI is advancing. But I don't think anyone who's writing multi-page blog posts has any concept of what AI is going to do to the job market.
Though. That's a lot of
right.
pages.
I was like, MCP being Model Context Protocol, which is like they're servers, but they're really adapters or apps that take your like Claude code and connect it to Notion and your do crash reports. And because I talk to people who are coding every day, who are creating software every day, it is an explosion. But all of that being said, there is an overinvestment by some. Look at Oracle, what Oracle stock, what's happened to that, what's happened to Oracle's bonds that it issued just at the end of September. And any gains in the market are broad-based because of AI productivity gains. So you talk about like the individual stocks and sectors, those have already reflected what investors have already factored in all of those AI gains in those individual names and individual sectors. I just think people are ignoring the fact that the government's borrowing 69% of its debt short term over 12 months. And there's such a lack of demand for the amount of supply that's coming on that the Federal Reserve had to intervene last week and start buying $40 billion plus whatever's down the pike. Because their Fed not only is creating an artificially low rate, but also having to create artificial demand for our excessive supply of debt.
I think on the debt front, that we're in I think it's hard to argue, we're in a better position today to deal with our debt under President Trump than we were a year ago or 5 years ago. So, has it come down? No. But do you see, between Bessent, Trump, what they're putting together, what they're doing? There's a plan of action that I think they're going to put in place. And I think, again, a big part of that is growth that we've talked about. But back to your other point on AI productivity, there will be growth next year. Like, we're going to see growth. So hopefully their plan works. I believe it will. And that will impact the deficit in a positive way.
I just hope the government borrowing doesn't crowd out private borrowing for those new businesses that come out of AI.